Hi, I'm Paul Aversano. I'm here in the New York office of Alvarez and Marsal today on a rainy Masters Thursday, wearing my Masters green. I'd like to talk about a few things today. It's a good time to take a little pause and update what has happened over the last 12 to 24 months in the M&A ecosystem and talk about where we are today and where we expect things to go. If you go back to, I guess, March of 2020, which is really when most of the world started to shut down with the pandemic, that was a black swan event. Nobody saw that coming. Unlike the financial crisis in 2008 and 2009, which people didn't see coming either, that was a financial crisis back then. The pandemic was first and foremost a health crisis, which then led to a financial crisis. But what was interesting about the pandemic, the economy and M&A environment came to sort of a pause or somewhat of a screeching halt for a short period of time, March through maybe June, July of 2020. But then, which was very unexpected, not just the M&A market, but public equities and economies generally around the world experienced a significant rebound, significant robust activity very early on in the pandemic, which was unusual because nobody really expected, nobody knew how long the pandemic would last, and nobody knew what was to come. So usually uncertainty is not good for the public markets. Investors do not like uncertainty. But I think what was driving that is the lessons of the financial crisis of 08-09 were still very much fresh in investors' minds. If you, with the benefit of hindsight, go back and look, particularly in the M&A environment, look at opportunities for returns and transactions that took place, the ones that provided the greatest returns were the ones that were invested very early on during the financial crisis, and therefore were able to ride the post-crisis rebound. I think investors still very much had that fresh in their mind and were very quick during the pandemic period to call a bottom. That bottom was called largely in the middle of the summer of 2020. So what was interesting, and I think it caught a lot of people flat-footed, which was how fast the rebound came and how long it lasted. And we're still pretty much in it right now. So very interesting times, very interesting opportunities. 2020, despite what happened with the pandemic, was still a relatively decent year for M&A activity around the world. But more interestingly, 2021, where we had other and additional waves of the pandemic, was actually a record year for M&A activity globally, with over 60,000 transactions taking place, 18,000 approximately of which related to purely private equity. So, where does that take us today? So as we rolled into 2022, M&A activity still has been as strong as it was in 2021. And that momentum and that activity has carried us through. What's interesting, though, as we got out of the pandemic environment, a lot of factors, variables, have been swirling around the economy, swirling around the M&A environment, swirling around the public equity markets. Things like inflation, things like supply chain, things such as energy costs, which have been rising, labor and wage costs. So these are things that are expected to impact the M&A environment, but right now they haven't, which is interesting to date. But most of all, we run into arguably another black swan event close on the heels of the pandemic, where the pandemic is actually still happening in some parts of the world today in early 2022. We have the Russia-Ukraine crisis. And who would have thought that would have happened? That's also causing and contributing to some of the variables that are impacting public equity markets, economies, and M&A activity around the world. So as I sit here today on Masters Thursday in 2022, I wonder, here's where we're at. We're still seeing robust M&A activity coming out of the pandemic, but where are we going? And what are we telling our clients at Alvarez and Marsal? So I like to say, and I was thinking about this, it's almost like from an M&A perspective, we're in purgatory. We're in sort of a holding period. We're seeing a lot of robust buy-side and sell-side activity around the world. But what's really driving that? I think what's driving that are investors and acquirers' fear of what is to come. Right now, the structural risks to the economy, as I previously mentioned, are prevalent. They're not going away anytime soon, and they're likely going to continue for the foreseeable future. At some point, these things will have a profound impact, or I am of the belief that these things will have a profound impact on the economy. And I think, this time next year in 2023, the world is likely to be a very different place. I think a lot of investors share that. You're seeing a lot of M&A activity to get ahead of what people believe are going to be, an upcoming either recession or worst case depression economic environment. What's also interesting, though, some of this risk, I do believe, is buffeted or mitigated by just the pure amount of capital that is awash in the markets. There is over $1 trillion unlevered of what we call dry powder, which has been raised by private equity, sovereign wealth, hedge funds, family offices, and whatnot, asset managers, that needs to be deployed. Needs to be deployed to chase returns, whether it be in the public equity markets, debt, or alternative investments such as private equity. So right now, chasing alpha and deploying that tsunami of capital that has been built up over the last several years is keeping the M&A markets sort of propped up and afloat. The question is, how long can that maintain? Nobody knows. My guess is, I think whatever happens, there will still be a constant flow of M&A activity. There may be a pause for a period of time, whether it be this year or next year, as the economy and as investors adjust to whatever is thrown at us. But ultimately, and history has shown in my 25 years plus experience of doing M&A, history has shown that ultimately everyone will adjust to a new normal, and whatever that new normal will be. So I think, if I had to summarize, I think we're sort of in a holding pattern right now to see what happens. But if things continue to deteriorate into a recessionary or worse, a depression in an economic situation, and you can't drive returns, investors cannot get the returns that they need in public equity markets or other investments, you're going to see an even further pivot into M&A as people look for returns. But what's to come? Will there be another black swan event? I mean, that's why they call it a black swan event, because you can't predict it. We've had two between COVID and Ukraine-Russia happening relatively in short order, but we'll see what happens. We're advising our clients at A&M to be diligent, to remain vigilant, to be cautious, but cautious, fortune favors the brave. And I think that's the mindset you need to take in this environment, not just today, but in the future when conducting M&A transactions.